Imagine discovering a vault filled with millions of dollars. Now imagine that vault is frozen beneath thick layers of crystal ice. Inside are stacks of cash protected from every possible danger. No one can steal it. Nothing can destroy it. The money is completely safe. But there is one problem. It isn't growing. And that single problem represents one of the biggest financial mistakes people make every day. They protect their money so carefully that they never give it the opportunity to grow. This is the reality for millions of people around the world. They work hard, earn money, save consistently, and believe that keeping their money untouched is the safest path to financial success. But saving money alone is not the same as building wealth. Saving is important. It gives you security. It helps you prepare for emergencies. It protects you from unexpected situations. But saving by itself rarely creates long-term wealth. Why? Because money that sits idle slowly loses its purchasing power over time. This hidden enemy is called inflation. Every year, the cost of everyday necessities increases. Food becomes more expensive. Housing costs rise. Transportation becomes more expensive. Healthcare and education continue to increase. $1 today does not have the same purchasing power years from now. So even if the number in your bank account stays exactly the same, the value of that money may become weaker. Imagine placing $10,000 inside a frozen vault for 20 years. When you return, the money is still there. The amount has not changed, but what that money can buy has changed. The vault protected the money, but it did not grow the money. And that is the difference between simply storing wealth and building wealth. Think of your money like a seed. A seed locked inside a safe may remain protected forever. It may never be damaged. It may never disappear, but it will never become a tree. A seed only reaches its potential when it is placed in the right environment, given time, and allowed to grow. Money works the same way. When invested wisely, money has the potential to multiply through compound growth. Compound growth is one of the most powerful concepts in finance. It means your money can generate returns, and those returns can generate additional returns over time. At the beginning, the growth may seem small, but with patience and consistency, the results can become significant. This is why time is one of the greatest advantages an investor can have. Many people spend years waiting for the perfect moment to start investing. They tell themselves they need more money. They believe they need a higher income. They think they need to understand everything before taking action. But many successful investors understand a simple truth. Consistency often matters more than starting size. A small amount invested regularly over many years can create powerful results because time allows growth to compound. The biggest mistake is not starting small. The biggest mistake is never starting at all. Now, imagine walking outside that frozen vault. The environment completely changes. Instead of cold walls and frozen cash, there is a massive futuristic forest stretching toward the sky. Every tree represents a different investment opportunity. Every branch represents growth. Every leaf represents the potential created when money is given a purpose. One tree grows stocks. Another represents real estate. Another represents successful businesses. Others represent bonds, precious metals like gold, exchange-traded funds, and carefully selected digital assets. This forest represents the world of investing. And just like a real forest, every tree grows differently. Some trees grow quickly, some grow slowly. Some survive difficult conditions better than others. But together, they create something stronger. This is the power of building a financial forest. Experienced investors understand that planting only one tree creates unnecessary danger. Imagine a forest where every tree is exactly the same. If a disease attacks that one type of tree, the entire forest could be damaged. Investing works the same way. Putting all your money into one company, one industry, or one type of asset can expose you to unnecessary risk. This is why successful investors focus on diversification. Diversification means spreading your investments across different asset classes so that one poor performing investment does not completely damage your financial future. A diversified portfolio may include different types of investments that respond differently to changing economic conditions. When one area struggles, another area may continue performing. This does not remove risk completely. No investment strategy can eliminate all risk, but diversification helps manage risk in a more intelligent way. It creates balance, it creates stability, and it gives your financial forest a better chance of surviving difficult seasons. However, investing is not about chasing every opportunity that appears online. Today, there are thousands of people promoting quick ways to make money. They promise massive returns. They promise effortless wealth. They promise that you can become rich overnight. But financial success rarely works that way. Many people lose money because they invest in things they do not understand. They follow trends. They follow online excitement. They buy because everyone else is buying. But successful investors ask different questions before putting their money into an opportunity. What exactly am I investing in? How does this investment create value? How does it generate returns? What are the risks? What is the long-term potential? These questions separate informed investors from emotional investors. Knowledge is one of the most valuable assets anyone can build. The more you understand, the better decisions you can make. Financial education does not guarantee success, but a lack of financial knowledge can lead to expensive mistakes. Another major mistake people make is chasing quick wealth. The internet has created a world where people constantly see examples of overnight success. Someone becomes wealthy from a business. Someone makes money from an investment. Someone shows a lifestyle that appears effortless. But what people rarely see is the process behind the result. They do not see years of learning. They do not see failures. They do not see patience. They only see the final outcome. In finance, shortcuts often come with hidden risks. Every legitimate investment carries uncertainty. Every opportunity requires research. Every decision requires understanding. The goal is not to avoid all risk. The goal is to understand risk and make smarter choices. The most successful investors in the world are not successful because they predict every market movement perfectly. They are successful because they consistently make disciplined decisions over long periods of time. They understand that wealth is built through patience. They understand that emotions can become dangerous when managing money. Fear and greed have caused many people to make poor financial decisions. When markets rise, people often become overly excited. They buy because they see others making money. They believe prices will continue rising forever. Then, when markets fall, fear takes control. They panic. They sell at the worst possible time. Successful investors understand that markets move in cycles. Growth periods happen. Difficult periods happen. The difference is discipline. They focus on their long-term goals instead of reacting to every headline. They understand that temporary changes do not always change the original reason they invested. A strong financial future is not created by emotional decisions. It is created by a clear strategy and the discipline to follow it. But investing is only one part of building wealth. Another important concept is understanding the difference between assets and liabilities. An asset is something that can create value, generate income, or increase in worth over time. A liability takes money away from you without creating future value. Building wealth is not only about earning more money, it is about increasing the number of valuable assets you own. Every financial decision you make is either moving you closer to financial freedom or moving you further away. The decision may seem small, a single purchase, a single investment, a single habit. But over many years, small decisions create very different futures. Remember the frozen vault from the beginning. The money inside was not destroyed. It was not stolen. It was simply inactive. It had potential, but it was never given a purpose. Many people treat their finances the same way. They earn money and save, but they never create a system that allows it to grow. Saving provides security. Investing creates opportunity. A strong financial future requires both. Many people wait to invest because they believe they need to be wealthy first. But wealth is built through small actions repeated consistently over time. A forest begins with one seed, then another, and eventually, those seeds become something powerful. Investing works the same way. Small steps, consistency, patience. But every investment needs a purpose. Are you building for retirement, a home, financial freedom, a better future? Challenges will come. Markets will rise and fall. Successful investors stay focused, keep learning, and make thoughtful decisions. Now return to the sleeping money vault. The ice melts, the walls crack open, the money transforms into seeds and enters the investment forest. Slowly, those seeds grow into powerful trees. The lesson is simple. Money is a tool. If this cinematic financial lesson changed the way you think about financial, make sure to like this video, share it with someone who is building their future, and subscribe for more stories about wealth, business, discipline, and financial freedom. And leave a comment.